600 million Indians face water shortages every year. That's nearly half our population today. And by 2030, demand for water will exceed supply by 50%. That sounds scary, right? But here's the twist. This massive problem has created one of the biggest investment opportunities of this decade, the water treatment industry. Welcome to Bottom Line. In today's video, we are taking a closer look at two companies that are leading this transformation wave. But before we head there, let's first take a look at the wastewater treatment and management industry. Now, India generates over 62,000 million liters of sewage every single day. But only about 1/3 of that gets treated. And the rest, it flows straight into the rivers and groundwater. Now, the Central Pollution Control Board says that 70% of urban wastewater, all of that is going entirely untreated. Now, if we just reused 80% of our untreated water, that could meet 75% of India's industrial water demand. That's the scale of opportunity that the companies are chasing. This isn't just an Indian problem. Globally, the water and wastewater industry is growing rapidly, and that's driven by climate change, urbanization, and smart city projects. Now, this entire market is expected to expand from $737 billion in 2024 to $797 billion in 2025, and it's growing at a strong 8.2% CAGR. And it could reach $1 trillion by 2029, growing at a CAGR of 6.7%. And the Asia-Pacific region, led by India, that will account for 42% of the world's market share by 2025. Now, think of this as a once-in-a-generation capex wave, where billions is being spent on pipes, plants, and purification. Now, a key growth driver for water treatment industry is the rising adoption of advanced technologies. And we're looking at this across industries like power, food, chemicals, pharma, and textiles. Now, let's deep dive into the companies which are transforming this space. Among the listed water treatment companies with a market cap of over 3,000 crores are Viatec Vabag, Ion Exchange, and Enviro Infra. And the performance varies here quite a bit. Now, Enviro Infra has shown strong growth, with sales rising 68% and profits up 72% over the last 3 years. Ion Exchange, well, they've shown a steadier pace of growth, with 20% increase in sales and 8% growth in profits. Viatec Vabag, well, they have seen relatively flat revenue growth at around 3% over the same period. While its profit growth of 31% looks good, much of it is coming from margin expansion rather than higher sales. Overall, Enviro and Ion have shown better growth momentum compared to Vabag. Let's understand their business models. Now, Enviro Infra Engineers is an EPC company, engineering, procurement, and construction company that designs, builds large-scale water and wastewater treatment plants. Their projects are mainly with the government under schemes like AMRUT 2.0, Namami Gange, and the Jal Jeevan Mission. The company also takes up operation and maintenance contracts. These are O&M contracts, and that adds an annuity-like revenue stream with contract durations generally ranging from 10 to 15 years. Now, Ion Exchange, on the other hand, they have a more diversified model. They earn from 3 segments. Think engineering projects, chemicals, and consumer water products. Its engineering arm builds treatment plants for industrial clients, while the chemical division is making resins and water treatment solutions that are used across the world. In the consumer water product segment, the company caters to individuals, hotels, educational institutions, hospitals, laboratories, the railways, and defense establishments, and they're providing safe drinking water and a clean environment. Now, as of Q1 FY26, Enviro's total order book stands at 2,051 crore rupees, which is 192% of its FY25 revenue, whereas Ion Exchange's total order book stands at around 2,664 crore rupees, which is 97% of its FY20 revenue. Now, let's analyze these financials. In Q1 FY26, Enviro Infra's sales grew 17% to 241 crores. Now, the rise in revenue, that came mainly from faster execution of key water and wastewater treatment projects and also a stronger order book pipeline. Now, the company carried forward an order book of 1,185 crore rupees from the previous year with a 24-month execution timeline, and that provides strong revenue visibility and growth momentum, and that is further supported by a healthy new order inflow of 1,178 crores in the current quarter. Now, the company's operating profit that grew 25% to 64 crore rupees, and the operating margins expanded as well. It expanded 200 bips to 27%. Now, although the margins for this quarter, well, they were on the higher side, the management has guided to maintain the margins in the range of 22 to 24%. Now, this has translated to a 40% year-on-year growth in net profit to 42 crore rupees, with net margins expanding 280 bips to 17%. Well, despite this healthy net profit and margins, the company is not able to convert it to cash. Let's look at the company's cash flow from operations, CFO. During FY25, the company earned a net profit of 177 crore rupees, but also reported a negative operating cash flow of 47 crore rupees. Now, the increase in working capital requirements, and that's mainly due to active government projects, this put pressure on cash flows. Trade receivables more than doubled to 189 crore rupees, reflecting slower collections, while plant and machinery rose to 64 crore rupees, and that indicated continued investment in capacity expansion. Let's now take a look at the growth outlook of the company. Now, Enviro expects strong growth ahead. Now, they've guided for 35 to 40% revenue growth every year for the next 4 to 5 years. However, as an investor, this must be monitored quarter on quarter, as 35% CAGR for 4 to 5 years may come out to be too optimistic. And though the company has guided for an order book of 2,500 crore rupees for FY26, out of which orders worth 1,200 crore rupees have been secured in Q1 FY26 only, and the company is expecting the balance order in the later part of the year. That said, let's take a look at the risks and challenges. Now, most of Enviro Infra's projects, they come from state government contracts under schemes like AMRUT 2.0 and the Jal Jeevan mission. Any delay in fund release can put pressure on cash flows and working capital, as we saw in FY24-25 when the Jal Jeevan mission payments were delayed due to elections and budget approvals. On the other hand, if we look at Ion Exchange numbers, over the last 3 years, sales have grown at a CAGR of 20%, but this has not fully reflected in profits. Now, falling margins from 14% to 11%, along with higher depreciation and interest costs, have weighed in on earnings. Now, that has resulted in a more modest 8% profit CAGR over that same period. Now, in Q1 FY26, Ion Exchange reported sales at 583 crore rupees. That was up 2.6% year on year. Now, the growth was modest as some projects were delayed and the company faced temporary disruptions due to a SAP system transition that was in effect. Now, operating profit was 63 crore rupees, mainly flat with margins stable at 11%. Now, margins that held steady mainly due to a one-time cost rebate from a large EPC project, which offset slower execution and higher infrastructure costs. Now, net profit that increased 7% year on year to 48 crores, while net margins improved slightly to 8.2%, supported by lower interest costs and higher other income, and that comprises interest income on cash surplus and foreign exchange gains as well. Let's now take a look at the company's cash flow from operations. During FY25, Ion Exchange's operating cash flow dropped sharply from 130 crores to 32 crores, falling from 45% of profit from operations to just 10%. Now, this shows that a larger part of the company's profit is getting tied up in receivables, which were 195 crores during the year. At the same time, the company is investing heavily in capacity expansion, with 320 crore rupees being spent on fixed assets. This has also pushed up its capital work in progress from 61 crore rupees to 323 crore rupees. So, what are the risks and challenges? Now, Ion Exchange, well, they face a potential risk from slow fund inflows from certain government projects, such as the UP Jal Nigam contract. Now, the delay in payments has affected project execution and led to higher receivables. Now, continued delays in fund releases could impact cash flow and the working capital efficiency. Now, reflecting this, we've got the company's cash flow conversion cycle that increased to 50 days in FY25 from 31 days a year earlier. And this was driven by higher debtor days and slightly lower payable days, indicating slower collection and tighter payment terms. So, both Enviro Infra engineers and Ion Exchange, they're playing a key role in shaping India's water infrastructure story. Both have strong opportunities ahead, but also face challenges in delayed payments, rising working capital needs, and execution risks. As investors, it's important to track how well they will convert this growth into sustainable cash flows in the coming quarters. What are your thoughts? Let us know in the comments below. And thank you for watching this episode of Bottom Line.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.